in a market like this that's very volatile, you tend to screw it up by short-term trading it because you get stopped out when you should be adding and stuff like that. So I know if something's going to go up 10x or 20x or 50x, what's the point in trying to eke out even more? And it just frees your mind that you can just leave it. It's different if you think, oh, it's going to go up 10% this year. Can I turn that into 15%? That's a whole different game. It's just not worth it here. It's just like in an exponential move, just buy and hold and go to the beach.
Yeah, I guess that's similar to the Michael Saylor thesis around Bitcoin, where he says, why should I go out and farm for 6% when I'm making my thesis? I'm going to make hundreds of percent.
Yeah, I don't do any DeFi. I've invested in some protocols, but I don't do any DeFi because my point is I don't really know the risk, and I don't care about 6% yield.
You know what I think? I think that, first of all, DeFi is not really about 6% yield. There's much higher yield, but you have to know exactly what you're doing, and it's a full-time job. I think there's an evolution, and it's all about how much time and effort you want to spend versus time and effort you want to spend somewhere else. It starts off with Bitcoin, and Bitcoin is the safest investment. And then you dip your toes into ETH, and then people follow the same path that you and I followed, where then we start going into major altcoins. And I guarantee you that in 3 months, when we get you back on the show, you'll be asking me for allocations in brand new ICOs, because that is the thing. But I think there's a lot more money in DeFi. It just requires a lot of concentration. I know people that on stable coin returns are generating 70% yield per annum. And that is because they're actively farming a yield. Now,
but you don't know what the full cycle risk is. And I keep talking about this and people don't listen. You have no idea what the actual finalized yield is going to be. So it looks good now. We don't know. So for me, it's like, I don't need to do it. And I get it. Some people can do it really well. I know a bunch of people who do this amazingly in DeFi, but it's too complicated, too much hassle, when I can just buy and hold and make myself a cocktail.
Do you think that Apple Pay is actually getting into Bitcoin? Do you think Apple's getting into Bitcoin? What do you speculate there?
Apple, I don't know at corporate treasury level whether they've got across the line yet, and there's reasons why. It's about accounting and how you hold it on your balance sheet. So I don't think they're there yet. Apple Pay is different because obviously Square and PayPal are in it. Apple don't have a choice. So of course.
Why do you say that there's financial issues with holding Bitcoin for a company like Apple? How is that different from a company like MicroStrategy or Square?
They all have it. It depends whether you're able to have the volatility on your quarterly earnings. Now, because Square being, Jack Dorsey's vehicle and basically MicroStrategy can do whatever Michael wants to do, they're prepared for that on their balance sheet. Something like Apple that is owned by so many people, and suddenly the volatility of your earnings is driven by your Bitcoin holdings, that kind of upsets investors. Now, it means that they need to make an accounting standard change, which I think the corporate treasurers will push through over time. And then once they do that, they can kind of keep it off balance sheet, so you can mark to market once a year or whatever, and then you don't have to have all the volatility of Bitcoin on your balance sheet.
We know that corporates are looking to buy Bitcoin, and that's the foot in the water. But it seems now that the volume of Ethereum is much bigger than the volume on Bitcoin. It seems like the funds, the traditional guys are waking up and they're saying that the volume on Ethereum is actually starting to eclipse the volume of Bitcoin. Do you think that corporates are starting to wake up to Ethereum as much as Bitcoin? I get the thesis of protecting your cash in Bitcoin, but you think that some of them are starting to actually enter ETH and saying,
well, you got to say which part of a corporate. So if it's a corporate balance sheet that looks to protect the cash the firm has earned, well, Ethereum doesn't really play a role there yet because its narrative is not about the store of value. Bitcoin's an easy thing to put in instead of a bit of gold or instead of a bit of whatever, right? ETH doesn't really fit into those portfolios yet. Now, maybe after ETH changes and we get through ETH 2.0 and it becomes a, lower supply asset, it's a harder asset, and maybe the narrative changes. So I don't think it's necessarily going to go on corporate balance sheets unless it's corporations who will be using ETH for future development, which is, we're starting to see. We saw Reddit using Ethereum to build out their token system. So I think we're going to see it, but for different purposes.
I know you're a massive fan of network effects. I know that you're a massive fan of Metcalfe's law. You keep talking about it, and you keep talking. I think you're really one of the people that really understand the network effects in the game. Network effects also dictate that there's not going to be many networks that do the same thing, right? So that you often say like one chain should win or two chains should win when it comes to smart contracts. Do you think that there are going to be many smart contract chains in the future, or do you think that there's going to be one or two and they're going to absorb most of the network?
I mean, usually everything works the 80-20 rule, right? Which is Pareto's law, that 20% will capture 80% of the economics. I don't see why that wouldn't play out over time here, because we're humans. If I'm a corporate and I need to build a blockchain solution for my business, am I going to choose a protocol? Am I going to choose Hedera, or am I going to choose Ethereum? If my job is on the line, I'm going to go to my boss and say, "Well, I've chosen Ethereum because it's the biggest and most liquid." Right? It just accrues. It accrues that way. Now, there can be step changes. Things can change. But generally speaking, it works that way. You didn't ask me where I'm allocating to in alts. And so my answer to that is community and social tokens, the metaverse. That's where I think...
Cancel your call.
That's where I think this is all going.
Cancel your other call. Let's quickly talk about that. So community, metaverse, and...
That's basically community and metaverse are the two macro bets that I'm actually taking within the alt space. The other's not a macro bet, it's just a basket, right? It's just a dumb money basket, Raoul's dumb basket. But I'm starting to take bets on where I think this is all going, which I think it's all going to be the really big consumer applications are going to be both metaverse and social tokens.
Give me some examples of social tokens.
No, they're too small, too illiquid, and I don't want to be a shiller. So I don't really want to do it.
We degens. But when you talk about community, without saying the name of the token, give us an idea of what you mean by a community token and by a metaverse.
Well, the bigger one that's more liquid that people know about is Chili's.
Yes. Okay.
I mean, that's every major football club in the world is using that as a way of running their entire fan base. Now, that's going to happen to music artists. You will end up tokenizing. I will end up tokenizing. Real Vision. Everything is going to be. Every community is going to be tokenized.
Would you buy my token? I mean, if I tokenized and I gave you a SAFT, would you take an allocation?
Probably not.
No. Fred, what is he? Which token is he talking? He said he's told us it's a small cap, which is similar to Chili's. We need to dig deep because Raoul Pal's invested in a small cap.